Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. I'm Arjun Patsakti. And this regulators, SEBI, has come out with its circular on regulation of online bond platform providers. SEBI has seen online bond platform providers come up to provide the best, easiest access to for non-institutional retail investors to the bond market to invest in bonds. And like any electronic platform, they enable ease of access with the most user-friendly interfaces, along with the most customer-friendly transaction process. And with information provided and more understanding by investors on how to invest in corporate bonds, what all to check for, it becomes much easier for both investors and for financial advisors to start allocating bonds to their clients' portfolios. And now SEBI is seeing the big scope for this bonds for the non-institutional growth development of the corporate bond market for retail and non-institutional investors. And they have come out with regulations to make sure that the bond platforms come with checks and balances. So the main features of the corporate online bond platform providers, which SEBI has mandated, is that they have to take a license, stockbroking license from the stock exchanges, which is NSE or BSE or both, and also to take a license for being a providing online bond platform as an online bond platform provider. So you need two licenses. One is a broking license as well as a separate registration as an online bond platform provider. The second is that SEBI wants or has made sure that the bond platforms deal only in listed securities, listed as in they have to be listed in the stock exchanges. And all unlisted or any other security that is not listed and traded in the stock exchanges is prohibited. So this provides more comfort for investors, given that once the security is listed in the stock exchanges, there is a lot of publicly available information, and they have enough and more information. And second is, if anything, they always have a recourse to the exchanges if there is any listing violation of listing agreements by the issuer of the bonds. The third is that all the transactions will have to go through the NSE and BSE. They have an what is called a request for core platform. So every transaction will go through the stock exchange and also be cleared by the clearing houses of the stock exchanges. This also makes the settlement process trustworthy and very seamless. And investors can now look to invest in corporate bonds as easy as they are investing in equities or any other asset class through the stock exchanges. This online bond platform providers will also have to provide a lot of information to investors, including the rating, including all the details of the bonds, along with the full term sheets, the full information memorandum, etc. So that retail and rating rationales by the credit rating agencies, all these will provide extra comfort to investors that they are having enough information before they invest in bonds. And also platform providers have to be extremely careful in terms of misleading investors through in advertisements, etc., so that the investors do not get misled by promises of higher returns or with lower risk, etc. So they have to be extremely careful on, again, what they're investing in. Second, but most importantly, is that like in equities, which has got a very large universe and all the shares are listed, but most of the investors know that many shares are not good for investments. Similarly, with bonds, there are many bonds listed and traded, and not all the bonds are definitely not good for investments. So they have to look to the information and the extra tools that bond platform providers provide them to sort out the right bonds for investments. Or they have to definitely work with their financial advisors if they are not able to evaluate the bonds themselves. The financial advisors will also now benefit from online bond platform providers, largely because now they have a very strong asset class where they can provide extra diversification for their clients in the fixed income portfolios, as also grow their assets in fixed income, and also help investors who are not able to take an investment decision in corporate bonds, largely by uh, giving the soundest of advice through all the information that they get from the bond platform providers. So it's a very good move by the SEBI to develop the market for corporate for bond market, and clearly the policymakers, regulators, government, and all the policymakers are very keen that there is participation by across all segments of investor classes in all asset classes and bonds. Bonds are one of the key areas where uh, retail participation is underrepresented, and that's largely because of the lack of an easy access to the market. And now with these bond platform providers providing the easy access and being regulated at the same time with checks and balances, it provides that much more comfort for investors and financial advisors to advise on bonds. Thank you very much for listening to Search for Eats. Do not forget to subscribe to our YouTube channel if you've not done so already.